The latest Monetary Policy Committee meeting of the Central Bank resolution to cut the base lending rate by 25 basis points marks the 10th consecutive rate cut in the country, bringing the base lending rate to 8.75%, down from 9% in December. A move that the Central Bank of Kenya Governor Dr. Kamau Thugge says should be translated to borrowers immediately. Jimmy Mbogo has that report.
For the 10th time in a row, the Central Bank of Kenya CBK has lowered the base lending interest rate from 9% to 8.75% in a move aimed at making loans cheaper for Kenyans. According to the CBK, the decision was informed by stable inflation rate and signs of economic resilience, noting that short-term rates have continued to decline, further tracking the CBR rate. The governor pointing out that although the rates have been on a downward trend even for commercial banks, the pace has been slower.
For those borrowers that borrowed their funds beginning December and have reference rate either the Kesonia or the CBR, we would expect the banks to lower their lending rates immediately by the 25 basis points that we have reduced the CBR by.
This latest monetary policy decision is set to boost credit to the private sector, with the central bank governor noting that lending to the private sector grew to 6.4% in January, up from 5.9% in December last year, and in a sharp reversal from a negative growth last year. Lending rates are still expected to ease even further from the current 14.8%. The central bank further remains positive that there is scope for further reduction of the rate.
And what are we doing to ensure that borrowers are enjoying the lower lending rates? And this is exactly what we have been trying to do by introducing this new risk-based credit pricing model, which is to ensure that all the banks have a common reference rate, and that reference rate is linked to the policy rate, the CBR, so that when we lower the CBR, there is also a proportionate or even a one-for-one reduction in interest rates.
With adequate liquidity ratio in the banking sector, the governor says that all commercial banks in the country will meet the 3 billion minimum capital requirement before the end of the first quarter in March of 2026, even as he welcomed mergers and acquisition in the sector to boost the lenders' capacity. Jimmy Mbogo, Citizen